GST benefit below 2,500. So your textiles or footwear. Any outlook on how things could change around for these companies, and if this is a fillip enough for the companies to once again see some meaningful volume growth?
So I think that, see, at the lower end, right, what happens is that while this is definitely a saving, in actual rupees, it's not that much, right? So what I'm saying is that it's not a temptation at the lower end to really go and buy more. They will get savings. Somebody who's already maybe postponed his purchase will go and execute it. But I think that the companies will have to work with the bankers and I know even these are not EMI based products, right? Most of the effect of the GST 2.0 I see as coming in the segments where EMI also plays a role in the buying process, right? So, durables, for example, even auto, for example, maybe even real estate, right? But if you take at the low end retail, right, the customers buy it. Somebody doesn't postpone a purchase of a new leather shoe, because of the price. It's low, but the sentiment is there that there's been a reduction. So there would be a slight shortening of the replacement cycle of these items there. So from that point of view, while there is a saving there, I'd like to wait and see how this translates in terms of the numbers. Because especially around festival season, you're also looking to make the big budget purchases, right? Because you remember the festival by that. You go to the shop and look for an air conditioner, refrigerator, or a car. So I think the biggest impact will be seen in the EMI based high ticket category, which have got the maximum benefit. It's either from 28 to 18, or some cases from 12 to 5, but most of them. So I think that this the category below 2,500, where the benefits are there, I would say that let's wait and see whether people actually go and do it, because whatever savings they get out of the whole package, they would like to deploy into the higher end category. If you understand what I'm saying, let's say I buy a low end product and I buy a high end product. I'm waiting for the high end product. The low end product will become cheaper now, right? So my replacement, but I'll still save some money and I'll redeploy through a EMI based purchase. So my focus is that the high end consumer durable discretionary items would probably be a little more in focus in the festival season. These products, when they get their natural replacement cycle, not necessarily at festival, but over the course of the year, right, would see the benefit of the GST cut flowing through.
No, absolutely. Fair point. And indeed, that is also getting reflected into the stock prices as well, because select counters within the auto pack, they are seeing no stopping. But Nagraj, let me have your take on one of the other sectors, and that is power space. I believe within power pack, you have already seen, and I guess your call was on NTPC, but one of the other pairs, Power Grid, even that stock is also buzzing in today's market as well. And what I see is that it's been holding quite smartly. And do you believe that it's a breakout where one can really bet on, given the fact that it's the top gainer on the Nifty 50 right now? And after a while, we are seeing the power sector coming back in flavor.
Yeah, rightly said. It was underperforming recently. We have seen some range-bound action, and today it has showed some significant move from the lower levels and hitting the 200-day EMA hurdle on the charts. I think the overall chart pattern is looking positive. I'm expecting upside breakout this time, and this stock could move further in the next, at least for 1 week. 300 is going to be 300, 310 is going to be the next upside resistance to be watched in the near term.
Right, so that's the take coming in on Power Grid. Let's watch out for that, and the overall take on the power space as well. But on the flip side, if we see the top loser on Nifty 50, and that indeed is Tata Motors, because do remember, almost 70% of the revenue that comes into Tata Motors is from their JLR division. So the 30% that is left for the India division, there too, yes, the company has come out with exciting numbers with almost 10,000 of deliveries that has been done on day one. But the JLR business is actually getting impacted with the whole cyber attack that was through. Earlier, it was anticipated that from 24th of September, the production will get back on track. But now it's been shifted towards the end of September month. And analysts do believe that it can impact the financials of the company. But Kunal, wanted to have your take on this one. Almost a 3% cut coming in on Tata Motors. What does it mean? Is the stock ready to fall even more?
Yeah, it looks like, and it's been an underperformer in the last 1 month. At a point when the other two-wheeler majors, Eicher Motors, Hero MotoCorp, Bajaj Auto, I think these stocks rallied around 15%. Tata Motors is clearly disappointed. Even on the four-wheeler pack, of course, from Maruti, M&M, etc., those stocks have done spectacularly well in this last 1 month of price recovery. But for Tata Motors, the stock was unable to scale even about that 735 to 740 barrier. And I think that's what could be a breakout point for Tata Motors. I'm not sure when that is going to come, but then I think it's always better in these kind of stocks that you wait out for that confirmation of a breakout. For Tata Motors, that level is just about that 735 to 740 barrier.
Okay, so that's a take on Tata Motors. Nagraj, what is your take on Minda Corp? We've seen the stock see a very big surge today, about 9 to 10% uptick in intraday only. And the management has come out with its 2030 vision, wherein they're sounding very optimistic on the revenue growth as well as the margin expansion front. What is your chart check on Minda Corp? Right now, also, as we speak, the stock has slipped from the day's high, but nonetheless, almost an 8.5-9% uptick is something that we're still seeing on the stock. Your take here?
Yeah, it's absolutely fine because the stock has bounced back sharply from the lower level. We have seen some significant breakout from the lower levels. On the weekly chart, it has witnessed a decisive upside breakout of downsloping trend line. I think overall chart pattern is looking positive. We have seen some sharp upside volume also. So the overall chart pattern is suggesting though the stock has moved up in the short term, there may be a smaller consolidation, and eventually we could see in the long term the stock is moving higher. And the next next important resistance to be watched is around 620, 625 levels. That could be achieved in the next couple of months.
All right, so that's the take coming in on Minda Corp. But Mr. Subramaniam, just wanted to have your take on the credit card player, SBI Cards, if at all you can speak particularly on this, because in the latest, the stock has been doing quite well. And to the theme that you have been flagging off, that people might make all those big ticket purchases, do you believe that going ahead and as we move forward with this festive season and the cheer around, SBI Card could also be a beneficiary?
I'd rather not do a stock specific answer.
Okay.
Can you pardon that?
All right, no worries. But Kunal, a quick chart check by you. 1.5% jump. I believe that you have been liking this stock of late.
Yes, Srishti, and I think at current levels also, I would believe that the stock should be poised for a break about that 900 mark. Rarely do you see a stock recovering quite strongly on the back of higher volumes, consistent price trend, and very good follow through in terms of price moves for the stock price. And we've seen all the ingredients for SBI Cards, and the recent move of 10% broadly from sub 800 levels to now 885, 890 mark, the range the stock is trading right now. I think it's been a very strong move in that sense for the stock. And generally, we've seen that after a phase of a pause or a mild consolidation, the stock gets ready for round two in terms of the price uptrend. And I believe in that second leg of price uptrend, hopefully, SBI Card should be able to break past about that 900 mark. So bullish on the stock. And from a short-term play, I would look at 904 to 914 as a near-term target range for SBI Cards.
So that's the take coming in on SBI Cards. But Mr. Subramaniam, any take on the real estate pack as well? Because of late, the counters haven't done that well. Because even though the numbers were quite very great, but some experts do believe that the best is rather behind. Though the pre-sales number are looking quite okay, but in terms of the demand, that is seen to be plateauing in some of the key markets. What's your sense on the real estate pack? Because of late, the stocks have also seen a bit of a decline.
So I have a slightly contrarian opinion there. I think that ultimately the real estate stocks will do well, because I just mentioned this part about the EMIs, right? About the savings, and even the real estate has been a beneficiary of GST cuts in cement and a lot of other spaces. But right now there are factors affecting this, and I'll explain those to you. So first is that this is not a good season for real estate. The monsoon time, construction activity comes down. So to some extent, real estate demand is also a function of the fact that rural, especially, people don't build homes at this time because of the rains and other things. That's one number point. Second is that, yes, it's been an underperformer over a period of time because the real estate was the biggest gainer and loser, whichever way you look at it, of the polarization of the consumption story, right? So you saw it in automobiles, you saw it in this, that very high-end vehicles were selling before the GST cut, and the low end was struggling, like a two-wheelers or an entry-level car. Similar to the real estate, affordable housing hasn't gone anywhere for quite some time, and it's the premium properties, whether it's in Gurgaon or in Mumbai or Bangalore or wherever, it's the premium high-end properties that have been selling. So builders also a period of time have converted their stock into the high-end segment. Now there, obviously, the number of units are less and a lot of these units have got sold. But now with the GST cuts coming in, right, we expect the affordable housing to pick up. But is the real estate sector ready for it yet? Because they have to get now parcels of land and they have to build and they have to plan for affordable housing, a larger number of unit product and then market them. Obviously, that's take a bit of time because given the fact that there wasn't much demand in affordable housing, they had also, whatever land they got, they tried to make it into a premium property. So now that change in mindset will take time to execute. You can't just flip a switch and do that. So now when they acquire a fresh parcel, they look at the positioning because these have to be slightly on the outskirts, whereas premium properties can be in South Bombay, for example. So to that extent, you would give it a bit of time for the real estate sector to gather its act together and do it. And anyway, in the festival season, right, people like to buy demonstration products like a car, which you can show, or you make buy a big refrigerator. So people visiting a home show it. So the festival is a time for that kind of a celebration and people showing that, oh, I acquired this at Diwali or at Christmas. Whereas houses are not that. Houses you buy, it takes 12, 18 months to construct. So I think that the second order of the GST cut combined with the rate cuts with the banks and all of that will play through in a little bit of time, maybe 6 months time to play that out. By the time the developers would have also launched a lot of affordable housing, those EMIs also when they come down will look more attractive. And I expect affordable housing boom to play out in the later half of this year and into the next year. So to that extent, 6 months, it hasn't performed compared to the consumption sector. Real estate hasn't performed. So it's probably a time to start buying on the dips and
All
hang
right.
in there. Don't expect an immediate bounce
Yeah.
back, but I think that's a good longer term play.
All right, let's watch out for that. But with this, Sunil, we let you go. Thank you so much for taking the time out and speaking with us. So just a few minutes left before